The oil market is closing the first trading week of the year on the optimistic note. Traders still give priority to positive factors which push benchmark prices to one-year highs. On Friday, March Brent futures have almost approached the level of $55 a barrel. To surpass this milestone price, the buyers need fresh market catalysts. February WTI futures are also rising today, trading at the level above $51 a barrel. Traders are celebrating the triumph of the Democratic Party at the U.S. Senate election in Georgia. The advantage of Democrats cements hopes for larger fiscal stimulus that is expected to boost a recovery in the U.S. economy and energy demand. Data on U.S. oil inventories support the rally of oil prices. The U.S. Energy Information Administration reported that crude stocks dropped 8 million barrels last week. Besides, the market owes its optimism to Saudi Arabia's decision to make voluntary cuts to its output in February and March. Nevertheless, the uptrend in oil prices remains fragile because the weekly gains come from pledges of one major oil exporter. To reinforce the rally, the oil market needs fundamental factors, for example, growing demand for petroleum. Demand is expected to revive in the second quarter, with prospects for a robust recovery in the second half of 2021. Now, analysts do not rule out a downward correction of oil prices. Investors could focus on negative short-term factors which could cast a shadow. On Thursday, Tokyo declared a state of emergency due to a surge in coronavirus cases. Yesterday, China reported the biggest rise in daily COVID-19 cases since July. Thus, the pandemic is still raging across the world. Markets are trading quietly in January in Russia because of long Christmas and New Year holidays. The ruble opened today with a sharp drop against the US dollar. Dollar bulls pushed the dollar-ruble pair up to the level above 74. The nearest target is seen at 75. In midday, the ruble stalled the decline, so it lost nearly 1% against the US dollar in intraday trading. The overall sentiment across global financial markets is viewed as moderately positive. Still, the ruble cannot find support. The Russian currency takes no notice of the steady oil rally. This year, the ruble is likely to win back some losses versus the greenback. However, it will hardly be able to strengthen to the levels of the early 2020. The main risk for the ruble is that Washington is poised to toughen its anti-Russia rhetoric. Early in the week, U.S. lawmakers confirmed the votes of the Electoral College and declared Joe Biden as the U.S. president. And that's all for now. Thank you for watching, and we'll see you back soon.